Welcome to this explainer. Today, we're going to break down the actual engine driving the entire AI revolution. We're talking about TSMC. And more importantly, we're going to figure out if their explosive numbers make them a smart investment for you right now.
Okay, so let's just dive right in with a massive question. Everyone knows NVIDIA, right? They're basically the face of artificial intelligence. But here's the kicker. They don't actually manufacture most of their own cutting-edge chips. So who is actually doing the heavy lifting behind the scenes?
The answer is Taiwan Semiconductor Manufacturing Company, better known as TSMC, and they have quietly surged to an approximate $1.96 trillion market cap. Just to put that insane number into perspective for a second, that is literally more than the GDP of many developed nations. They're just quietly sitting there in the background of the biggest tech boom in history, turning digital designs into physical reality.
To understand why this really matters for your portfolio, we're going to hit 5 key areas today. First, the engine of AI. Second, decoding the revenue boom. Third, TSMC's competitive moat. Fourth, margins and geopolitical risks. And finally, the final investment verdict. All right, let's kick things off with Section 1, the engine of AI. We're looking at how this company is fueling the entire artificial intelligence revolution.
Think about the AI money pipeline for a second. It's like a giant funnel. Capital flows straight out of big tech. We're talking companies like Microsoft, Meta, Amazon, and Google, and goes directly into chip designers like NVIDIA and AMD. But here is the crucial part. Those designs then funnel straight into TSMC's manufacturing facilities long before they ever reach an AI data center. So if big tech increases their AI infrastructure spending, every ounce of that demand has to filter through TSMC's supply chain to become physical hardware. They are absolutely the critical choke point of the future.
Moving right along to Section 2, decoding the revenue boom. It's time to validate all this hype with some hard data. What is so wild here is the sheer consistency of their growth. We're not just looking at one lucky month. Instead, we are seeing broad-based, massive year-over-year revenue jumps across the entire first 7 months of 2026. I mean, look at this. June was up almost 68%, and July was up nearly 45%. The demand is just absolutely relentless. It really proves this AI boom is definitely not just smoke and mirrors. So in total, they brought in 2.872 trillion new Taiwan dollars just through July alone. That represents a 37% increase year over year. Listen, for a company of this immense size, growing at 37% is the ultimate fundamental green flag. We aren't just talking about a great story anymore, you know. We're talking about historical, undeniably verifiable cash flow.
Which brings us perfectly to Section 3, TSMC's competitive moat. We need to talk about why they simply cannot be easily replaced.
You see, a competitor can't just randomly announce they're building a better foundry. TSMC's dominance is protected by profound engineering expertise and capital barriers that are, frankly, just way too steep. When a single next-generation chip factory costs upwards of $20 billion to build, practically nobody else can afford to even try and compete. Between their unmatched advanced process technology, literally decades of manufacturing know-how, their massive scale, and deeply integrated customer relationships, they are practically irreplaceable right now.
But let's take a breath because here comes Section 4, margins and geopolitical risks. This is our essential reality check. Okay, so here is a really subtle but absolutely critical warning for investors. While their Q2 revenue was exceptional at $40.2 billion, management's Q3 guidance actually projects a slight dip in both gross and operating margins. So Q2 gross margin was a stellar 67.7%, right? But Q3 is modeled slightly lower, somewhere between 65 and 67%. It's just a really good reminder that if revenue rises while margins start to compress, well, that's a red flag we always need to monitor. Furthermore, they are building new, potentially higher-cost facilities in places like Arizona to try and diversify. But as investors, we have to impartially recognize that TSMC remains deeply and strategically tethered to Taiwan. You can totally build new factories overseas, for sure, but you cannot easily replicate an entire integrated technological ecosystem overnight. It just doesn't work like that. And we also have to objectively factor in strict government export policies, alongside the reality that geopolitical tensions between Taiwan and China could impact global supply. Honestly, Washington and Beijing's policies matter just as much as an earnings report these days. On top of all that, any non-AI cyclical weakness in consumer electronics, stuff like smartphones, cars, and PCs, that will still hurt TSMC. Because AI demand alone doesn't make them completely immune to regular market cycles or, the high costs of ramping up those brand new overseas factories.
All right, bringing it all together with Section 5, the final investment verdict. Let's look at the strategy and scorecard for TSM. So with the stock recently trading around $419 and earning an exceptional fundamental score, the playbook here is basically this. Hold for the growth, but only buy on pullbacks. And you'll definitely want to closely watch the upcoming August monthly sales as the next big catalyst. Look, as long as revenue remains robust and gross margins stay above that 65% mark, holding is heavily supported by the underlying data.
But conversely, you've got to be ready to get defensive if you see the dreaded combination of revenue growth suddenly collapsing, margins structurally deteriorating, or major AI customers reducing their hardware orders. And of course, if Taiwan geopolitical risks fundamentally change the situation and materially escalate, well, the entire investment thesis shifts immediately.
So, what you should really take away from this explainer today is a pretty simple truth. TSMC is an incredible company, literally fueling the future, but with so much of that growth already priced in, are you disciplined enough to wait for the pullback?